All right, everybody. Recorder's on, and from a spillover, which happens all the time when we actually have conversations, from our last discussion slash video this morning, some questions arose about gamma. And since I didn't want the video to go too long and be too boring for you guys, I decided that we would make a separate video this afternoon. Hopefully that makes sense to you. If it doesn't, too bad. Just kidding. Okay. So gamma. All right, Damien, we'll catch you in a little bit. No worries. Yeah, I try to record as much as I can if I know that, something that, if I know that, if I know that it's recording worthy, then of course I'm going to record it. Sometimes, we get to talking and, I didn't really realize it was going to turn into a lesson, but that happens. But in this case, no problem. And we are good to go. Okay, gamma. What is gamma? Let me get a... hang on, let me cycle through here. And let me find that. Okay, gamma, like I said before, is for the calculus people out there, gamma is the first derivative of delta. For those of you that aren't comfortable with that, I don't blame you. I was a math major and I don't like it all that much. So, gamma is the speed at which delta moves. So as we see, as time to expiration, this is the curve that you'll see. First you'll see, let's look at this. The green line here, where'd you go? The green line here, oh, again, I did something dumb. Leave that, get rid of that, and this is what I want. I have overlays because of how we are projecting. We're projecting from the office, and I am can we make this bigger? We can. Where'd it go? I want to make sure where it went. I went to desktop. All right, let's make it bigger. Okay, not the cleanest picture, but you'll get the idea. For one, gamma is always highest at the money. 50 delta option is going to have the highest gamma. And you can see that the gamma decreases as you go away from the money. On top of that, the time to expiration, as time to expiration gets closer and closer to expiration, the gamma gets higher. So when you look at something like this green line, the gamma really doesn't change a whole lot over the strikes. This is a strike of 30 to 70 for this example. The blue line, you can see it gets a little bit bigger. That's a 6-month option. And then a 3-month option, it becomes even more. And you can see how this curve distribution will become tighter and tighter as you get closer and closer to expiration. So the thing to remember is that gamma is strongest at the money and moves slower as you move away from the money, from at the money. And the closer that you get to expiration, the higher the gamma. Because you can think about it. Let's talk about if today was expiration. And let's say there's 10 minutes to go in the trading day. That option, and let's just say that we have a call option and it's just below the money. Let's just say it's a dime out of the money. That option is going to have either a 0 or 100 delta in the next 10 minutes. Right? If we're below the strike, it's going to have a 0 delta because it's worthless. If it's above the strike, it's going to have 100 delta because it's stock. So it's going to go from 0 to 100 as it toggles around that strike. Now, that's with 10 minutes to go. Let's say that we have 9 months to go, like this green line here. Well, with 9 months to go and we're a dime below the money or if we're a dime above the money, does that really change the delta of that thing? Because think about what can happen in the next 9 months. We're not talking about the next 10 minutes. We're talking about the next 9 months. So we can think about it like that. Let's look at some real examples here. Get rid of that. Okay, some real examples here. I think I have Apple up here now. Yeah, that's fine. Apple. Here's our option montage. Okay, let me actually populate the gamma. We usually don't have gamma up on the montage grid because we don't need it all that often. But for this, we do. Here's the call and the put. Remember that the call gamma and the put gamma at the same expiration and same strike will be exactly the same. Okay, so we got gamma here now. And these a little smaller. There we go. Okay, so this is Friday. We see that the gamma for Friday. Did the call gamma not move over? I told you to call gamma. Call gamma should be there. Oh. Put it there. And we'll put that there. That's fine. Perfect. Okay, so the call gamma, why are you not there? There it is. Okay, gamma. So that this means, okay, so right here we're trading about what, 378.80. So we're a little bit out of the money. The call has a 49 delta. And we see that the gamma is 2. Okay? What that is saying is that for each unit, meaning a dollar move, for each unit on the dollar move, the delta is going to increase by 2. So let's look at that. So let's theoretically, let's go out to the 380 strike and we're going to buy one of these. And we're going to look at that 3D risk chart. And here it is. Okay. So now here we are. Let me get rid of those arrows. And let me get rid of these other expirations so it doesn't get all cloudy on us. Okay, so we can see here the delta is 49, the gamma is 2. So theoretically, if we move up $1, the delta should be 51. There might be some rounding in there, so please forgive me. But if we go from 378.73 to 379.83, we see that the delta did in fact increase by 2. So instead of a 49 delta down $1 lower, we still have the same gamma, 2. So if we were to go up another $1, we should expect our delta to be 53. Okay, and that's with 4.5 days left to go until expiration. Let's look at something much further out in the money. Let's go out to January of 21. Same strike, the 380 strike. We're going to have one of those. This is what this is going to look like. All right, so that looks like a call, but look at this. Within a rounding error, it has a 53 delta here, but we did move up a little bit. It has a 53 delta here, but look at the gamma is 0, which means that this delta, if we go up $1, shouldn't move at all. Let's see if that's the case. So we go from 378.72 to 379.72. The delta did increase by 1, but like I said, there's going to be some rounding in there. But there's going to be a big difference in there. So it's the speed at which the delta moves. As timed expiration moves closer, gamma gets bigger because there's going to be a binary outcome in a very short amount of time. In this case, 4.5 days. With the ones that are expiring Friday, or these that are expiring in January, which is a whopping 172 days away from now. Okay, any question on that? On gamma. This video is a little bit shorter. It's only about 12.5 minutes long right now. If there are no questions, I'm always up for other questions if you guys have other questions. Gamma will increase as the expiration comes closer. Yes. Because it either is or is not going to be in a very short order of time. Whereas if you go longer out in expiration, it has this, David asked, so gamma is used in conjunction with theta and time decay. Well, theta and time decay are the same thing. You can use those terms interchangeably. But gamma, yes. So gamma and theta, as far as magnitude and how it works, theta increases as the time to expiration nears. Gamma increases as the time to expiration nears. Those work in the same direction. Good. It can be a little bit of a weird concept, but if you think about things, about what an option is and what it eventually becomes, we use a lot of analytics and a lot of numbers and everything, but in the end of the day, it either is going to be something or it's not. This is our mathematical way of explaining the different pieces and the different components on how we price options and how we expect them to move if and when they move. Well, theta's a risk too. Either way, if you're on the credit side or the debit side, it's a risk. And delta's just a function of how fast you want it to move. If you want to replicate stock, well, then you trade an in-the-money option. That's not the way that we trade it here. Some people do that because, hey, I want to, if I have to go out and buy, it's going to cost me nearly $38,000 to buy, of margin at the very least, if not actual cash, to buy 100 lot of Apple stock. And then if I want to go out to Jan, I only have to pay nearly $5,300 to control that same 100 shares of stock for this. But theoretically, you can own the Apple stock forever. It can go to zero. You still own the Apple stock. It may be worthless. Yeah, and gamma's not something that we specifically trade. Market makers will specifically trade gamma, and that's a. I'll put that out on the blog today. It's not really worth. It's not really worth a discussion on it because we don't do it. But it's something that you should be able to see. But it's something that you should know about. That as things get to expiration, you have to be starting to think, hey, this option is going to move. It's either going to be or it's not going to be in 4.5 days. Same thing with theta. Man, I'm short this theta, and if we sit here, this extrinsic value is just going to cave in on itself, and I'm going to be raking in money. Or, wow, I'm long these options, and we only have 4.5 days to expiration. I got to be very careful about my time decay. Exactly. Gamma's the rate of speed. It is the rate of change of delta over time and over how the underlying moves. Okay, good. All right, let me get this video rendered out to you. It'll take about 10-15 minutes, and I will put that gamma scalp out on the blog again, and I'll put this up on the board again. Okay, let me get this going here. Any other questions, throw them up there. Not a very dynamic trading day.